And of course, according to what we understand, the Central Bank of Nigeria has actually held the monetary policy meeting steady. The policy rate rather steady at 27%, away from what a lot of people actually thought. We heard details from analysts before now that it would probably be 100 basis points to 200 basis points. But then, of course, it has been retained, according to what we understand. And Governor Olayemi Cardoso announced the decision after the MPC's 303rd meeting in Abuja, saying all 12 members voted unanimously to maintain the current stance. The committee also kept the standing facility corridor at plus 50 and minus 450 basis points, retained the cash reserve ratio at 45% for merchant banks and 75% for non-TSE public deposits. The MPC also left the liquidity ratio at 30%. Well, the Governor Cardoso says the decision reflects Nigeria's recent trend of low and stable inflation. So that seems to have knocked off the sail, or should I say the wind from the sail, from so many analysts who were actually hoping that there will be some rate cuts. At this moment, I'm joined by Olufunmilola Adebowale, Head of Research at our Parthian Partners, and she will be sharing her thoughts with us. Thank you so much for coming around.
Thank you for having me.
So from this latest MPC decision, how would you assess it?
Well, it's actually surprising because most analysts, for the ones that are more cautious, were projecting 50 to 100 basis points, and some were even projecting as high as 200 basis points. So this is surprising. But I think the only thing that is different is the fact that it was able to adjust the asymmetric corridor to plus 50 minus 450, which means that the standing deposit facility will now be at 22.5%, which is not too far from what OMO bills are. The thing is, we have to understand, while he has mentioned that inflation at 16% is high, which is true, the target is to achieve a single digit, about 6 to 9%. A lot of work has been done since December and all, moving from 34% due to rebasing and other factors, inflation factors that have really improved and helped to achieve that. But it's important to understand that the MPR is the anchor rate, and it should set the tone for every other rate in the economy. We've seen how Treasury bills has reduced to 16% for the one-year bill. We've seen OMO rate at 20%. So at 27%, I think there's still that gap between the MPR and the effective interest rate. So that transmission mechanism could be slow to an extent. So I think that is just a major concern for me at the moment.
So what about the inflationary figure at 16 now? We know where we used to be up until now, and that seems to be one major indicator that actually influenced this particular decision. But then Nigerians have actually questioned, they've actually questioned if this figure is actually realistic. So what do you think?
Well, that conversation will keep going. It will keep going. Okay, trying to say that, okay, inflation at 16%, I've been to the market and prices are not falling as much as the CBN has been, the NBS has been projected. The truth of the matter is, while there are still controversies around what the figure is, if you look at the drivers of inflation, they've improved. Look at the Naira. The Naira has appreciated to about 1,450, 1,440 from what it was, I think about 1,900 in H1 2024. That has been a significant improvement. And the Nigerian economy is sensitive to the exchange rate. In fact, I remember last year that when you even go to market to buy as something as flimsy as Gary, and he said, the price is up. He said, yeah, Naira is expensive. And I tried to understand what the correlation is. That's the psychological effect of the impact of the Naira on Nigeria. So if you look at the factors that are actually driving inflation, they've eased. Exchange rate has appreciated. If you look at logistics costs as well, it has dropped. But thank God, thanks to the bearish sentiment in global oil prices, Naira has been stable because the demand for FX for PMS import has slowed. So those factors are supporting the decline in inflation, irrespective of the number. But at this point, I also like to mention that the fact that inflation fell to 16.05% from 18.02 doesn't mean that prices are falling. It only means that prices are increasing, but at a slower pace. And it is the average inflation in the economy. But I've also noticed that in the last, I think 2 to 3 months, the price of agri-commodities has been on the decline because of the harvest. So those are the factors, the seasonal factors that can tell you whether price will go up or not. But because inflation is at 16%, doesn't mean that price has generally falling.
Okay, so you talked about the calmer FX markets. What about output growth And of course, we've also seen how the market has played out in terms of external reserves, rising. The numbers have been quite appreciable over the course of the months. How would you describe those two and the influence or the impact they've had?
Yeah, so when you look at the external reserves, we've seen a steady accretion, I think, in the last couple of weeks. And that's because, the reforms, the FX reforms and all have sent positive signals to investors. And we've seen a drastic increase in the FPI flows into the economy, and that is supporting the reserves. For oil price and oil production, oil price has been largely bearish. So we've not really seen that huge support from maybe oil exports and all, but thanks to FPIs. And then in terms of output, if you look at output, let's look at the non-oil sector. Even from the financials that have been released so far in H1 and 9 months, we've seen significant improvements in companies, especially in the manufacturing sector. And that is because those sectors are sensitive to the exchange rate. Exchange rate is appreciating, cost of imports is reducing, and that is positive for them. So we are seeing that improvement in terms of output levels, in terms of performance of companies in the non-oil sector. The external factors are improving. The external reserves is up, exchange rate is stable, current accounts balance is up. So I think those factors are positive at the moment.
So do you think this stability and these improvements, when you look at these macroeconomic indicators, will continue to the festive season? Because that's where we're moving into now. And we understand what the Nigerian market usually says when we are at this particular end of the year.
Yeah. For me, I think we're likely to see that downward trend being sustained, especially if the Naira remains at current levels, and we're expecting families and friends into Nigeria. That should boost, FX inflows into the country towards the end of the year. Demand has weakened because we're no longer really importing PMS. So I think those factors are supporting the fact that we are likely to see inflation continue to decline. And moreover, if at this point, bag of rice has declined to about 59,000 from almost 100,000, and this is just a week to December, I'm sure corporates that want to distribute rice and all, they would have stocked up. So that increase in price we might see in December could be from retail end, and it might not be as significant as what we would have seen with corporates bodies. So I do not see anything that will make inflation, reverse this inflation trend in the short term. Okay,
so, well, yeah, you say you do not see, but then those are domestic issues, right? Let's look at the global commodity volatility in oil and the disruptions we've seen with the geopolitical tensions that have gone on, and we know there are still weather shocks and some other, external factors. Do you think these could also affect the indices as we end this year?
Well, it might, but I don't think it's going to be that significant. Don't forget that most companies, there's an inventory level. They stock up for like 3 months or so. So that immediate shock might not impact us in the short term. Before the impact might be transmitted, it could take like 3 months. So we're talking about maybe January, February, March before we start seeing the impact of any shock in global prices. So I do not see that impacting the domestic market in the short term, but it could have a medium term impact on the market.
Okay, so I'm not sure we've talked about is the asymmetric corridor, plus 50, minus 450 basis points. How do you think that would also reflect?
Yes, so I think one of the reasons why the other side, the minus 50 is huge, is because they're trying as much as possible to reduce the SDF, that's the standing deposit facility, the rate at which commercial banks deposit money with the CBN. So it has reduced from about 24.5% to 22.25%. So I'm sure the CBN is trying in a way to discourage banks from keeping funds with them. Rather, they should embark on their traditional responsibility of giving out loans and all. But at 22.5%, I must tell you, it is still attractive. It is, compared to what they will get from OMO bills, from treasury bills. I think it is still attractive. It might not be able to fully capture what the CBN intends to do with that policy decision.
And we also see that the banks, like some of them have actually recapitalized. They've met that threshold, and a lot of them are also trying to strengthen their balance sheet. But then are you seeing the greens probably, in the next couple of months, or maybe before the next MPC meeting?
Yeah, I think the deadline is March 2026. So a number of them, at least the tier ones, have done so well in meeting that recapitalization. So for me, I don't think there will be an issue. We could see merger and acquisition at the tail end of the curve for the small players. But for me, what is more important to me is, okay, you have more funds now. what are the strategies that are in place to be able to effectively utilize these funds. Don't forget that shareholders are concerned about the return on their funds. So I think it's now time for banks to be strategic or be innovative with the way the funds is being utilized to be able to maximize returns. So I think that is key for me beyond meeting the recapitalization, because a number of them, especially the big players, would definitely be able to meet. Some of them have met, even the ones that are yet to meet, they should be able to. Okay, so
for SMEs, other kind of businesses, and Nigeria's economic growth, because we understand the forecast between 3.6 and 4.5%. And we see that the monetary policy decisions have an idea of what they're hoping to achieve. Then what other policies, probably on the fiscal side, do you think can help, can pivot the country towards that projection and also help businesses to be more resilient?
Yeah, so with what we've seen, I think credit to the private sector is likely to gradually improve. But beyond that, there's a lot of work that has to be done from the fiscal space. Look at the Finance Act. At least the small businesses have been exempted from paying tax, so that will give them more funds to be able to turn around their businesses. But more importantly, most of these businesses are sensitive to the exchange rate. So I think if the exchange rate keeps appreciating or stabilizes at the current level, that is very key for them to be able to, plan. When there is stable exchange rate, you have a long-term plan and all. So I think that is key. Then also investment in infrastructure is very important for businesses, because that will also feed into their cost and all. So I think when all this are put in place, with the fact that the CBN is also trying as much as possible to boost credit to the private sector, it will, in the long term, help to boost this sector of the economy.
All right, that's good. Thank you so much. We're hoping that with these decisions being made and the economic measures coming from the government, the Nigerian economy will be more robust as we move into the new year. But then I must say thank you so much, Olufunmilola Adebowale, Head of Research at Parthian Partners. It was nice having you in our studios. So that's it. As we conclude on this special broadcast, having looked at the CBN MPC 303rd meeting. And of course, we will continue to discuss this and see what other analysts, and of course, probably their reactions to this, if they are happy or satisfied with this latest key decision coming from the MPC. Thank you so much for being part of it. My name is Lekan Onabanjo. We'll be bringing you the news at the top of the hour, so don't go away.